The real-time real estate segment today being brought to you by rsrmoney.com. rsrmoney.com. How to buy a home without waiting for lower rates. Many people are hoping mortgage rates will come down before they buy a home, but will that actually happen? According to the latest forecasts, experts say rates will decline, but not by as much as a lot of people want. The good news, even if they don't drop substantially, there are still ways to make buying a home more affordable. So how much will rates drop? A few months ago, experts were forecasting mortgage rates could dip below 6% by the end of the year, but recent projections suggest that may not happen after all. While mortgage rates are still expected to decline some later this year, projections from Fannie Mae and the Mortgage Bankers Association, MBA, and Wells Fargo now show them stabilizing closer to the 6.5% to 7% range. If you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk AM 1490 FM 98.1 video feed, you are seeing a chart of mortgage rate projections from the aforementioned institutions. That means if you're holding off on buying a home in hopes of much lower mortgage rates, you may be waiting a while. And if you need to move because something in your life has changed, like a new job, a new baby, or a marriage, waiting that long may not be an option. Creative financing options in today's market, since rates aren't expected to decline as much as originally expected, it may be worth considering alternative financing solutions that could help you get into a home sooner rather than later. What are 3 strategies to discuss with us to see if any of these make sense for you? Number 1, mortgage buydowns. A mortgage buydown allows you to pay an upfront fee to lower your mortgage rate for a set period of time. It could be 3 years. It could be 2 years. It could be 1 year. It could be for the entire life of the loan. You want to find out more about this? We did a full show on it. rsrlinks.com/buydown. rsrlinks.com/buydown. This is going to be especially helpful if you want to need a lower mortgage payment. In fact, 27% of agents say first-time home buyers are increasingly requesting buy downs from sellers in order to buy a home right now. Number 2, adjustable rate mortgages. ARMs typically start with a lower mortgage rate than a traditional 30-year fixed mortgage. This makes them an attractive option, especially if you expect rates to drop in the coming years or plan to refinance later. And if you remember the housing crash, know that ARMs aren't like the risky ones back then. Lance Lambert, co-founder of Resi Club, helps drive this point home by saying, quote, ARM products today are different from many of the products issued in the mid-2000s before 2008. Lenders often approved ARMs based on a borrower's ability to pay the initial lower interest rate, and sometimes they didn't even check that. Remember the ninja loans? Today, adjustable rate borrowers qualify based on their ability to cover a higher monthly payment, not just the initial payment, unquote. Now, the 7-year adjustable, that one there you qualify based on the lower rate. The 5-year, you have to go on based on a higher rate. In simple terms, banks used to give loans without checking to see if buyers could afford them. Now lenders verify income, assets, and jobs, reducing the risks associated with ARMs compared to the past. Number 3, assumable mortgages. An assumable mortgage allows you to take over the seller's existing loan, including its lower mortgage rate, with more than 11 million homes qualifying for this option, according to U.S. News. It's worth exploring if you want or need a better rate. Bottom line, waiting for a big decline in mortgage rates may not be the best strategy. Instead, options like buy downs, ARMs, or assumable mortgages could make homeownership more affordable right now. Give me a call at 800-306-1990 as a certified liability advisor. I help families build wealth through strategic debt management. Again, give me a call, 800-306-1990. That is the Real-Time Real Estate segment brought to you by rsrmoney.com, rsrmoney.com.